House hacking in real estate has become one of the most popular ways for individuals to start building wealth and gaining financial independence. As we look ahead to 2025, the landscape of real estate continues to evolve, offering new opportunities, challenges, and strategies for those interested in house hacking. Whether you're a first-time buyer or an experienced investor, house hacking provides an accessible and relatively low-risk path to dive into real estate. In this speech, we'll explore what house hacking is, why it's a smart strategy for 2025, and practical steps to help you get started in today's market. Let's start with the basics. House hacking, in its simplest form, is the practice of purchasing a property, typically a multi-family home, and renting out part of it to generate income that helps cover your mortgage and other property-related expenses. The beauty of house hacking is that it allows you to live in one part of the property while others pay for your living costs, and in many cases, even generate a profit. This can help you get into the real estate game without the huge upfront capital required for traditional investments, making it an excellent strategy for those who are looking to build long-term wealth. But why is house hacking so popular right now, particularly in 2025? The real estate market has seen significant changes over the past few years. Interest rates have fluctuated, the housing inventory has been limited, and property prices have skyrocketed in many areas. At this time, the rise of remote work has led to shifts in how people live and where they want to live. More people are looking for flexible, affordable living arrangements, and many are turning to house hacking as a way to solve their housing and financial problems simultaneously. If you're thinking about getting started with house hacking, one of the first things to consider is the type of property you want to purchase. The most common property for house hacking is a multifamily home. Think duplexes, triplexes, or fourplexes. These types of properties give you the flexibility to live in one unit while renting out the others. If you're just starting out, this might be the most straightforward option, but it's not the only one. Some people also house hack in single-family homes by renting out rooms or separate areas of the house. This is known as room-by-room rental, and it's an option that works well for certain property layouts or locations. Another option that has gained traction in recent years is house hacking through short-term rentals. With platforms like Airbnb and VRBO, homeowners can rent out individual rooms or separate units on a nightly or weekly basis, potentially generating more income than traditional long-term renting. In 2025, this strategy is even more viable given the continued growth of the short-term rental market and the increasing popularity of travel and tourism. If you're in a desirable location, short-term rentals can be an excellent way to maximize rental income and have the flexibility to use the property yourself when it's not rented out. However, not all house hacking strategies are created equal. Each method comes with its own set of challenges and considerations, and understanding these is crucial to making an informed decision. If you're buying a multifamily property, for instance, you'll need to think about how you'll manage tenants and whether you'll hire a property manager or handle the responsibilities yourself. You'll also need to be aware of local zoning laws, rental regulations, and the overall demand for rental properties in your area. In some cities, there may be restrictions on short-term rentals, or you may need a special license or permit to operate. When it comes to financing your house hacking property, it's important to note that one of the most appealing aspects of house hacking is that it can be done with relatively little upfront investment compared to other types of real estate investments. In 2025, with mortgage rates remaining at historic lows in many areas despite recent hikes, the ability to finance a property with low down payments is still very much a reality. Programs like FHA loans allow buyers to put down as little as 3.5%, while VA loans and USDA loans offer even more favorable terms for eligible buyers. Additionally, if you're house hacking a multifamily property, the rental income from the other units can often help you qualify for a larger mortgage than you would otherwise be able to afford. Lenders consider the potential rental income from the property as part of your income when determining your loan eligibility, which can give you a leg up in purchasing a more expensive property than you could afford if you were relying solely on your own income. But let's not sugarcoat things. House hacking isn't a perfect solution for everyone. While it can be an excellent way to generate income and cover your living expenses, it also comes with risks and responsibilities. Owning and managing a rental property involved with tenants, maintenance, property management, and other potential headaches. Even though you may be living in the property, you'll still need to ensure that it's well maintained and that your tenants are satisfied. If you're renting out rooms or units, you need to be prepared for the possibility of bad tenants, late payments, and the occasional dispute. On top of that, you'll need to budget for ongoing repairs and maintenance, property taxes, insurance, and other costs associated with owning real estate. One of the most important aspects of house hacking is understanding the financials. It's essential to have a solid grasp of how much income you expect to generate from your rental units and how that income will offset your expenses. This includes not only your mortgage payment, but also utilities, insurance, property taxes, and any property management fees, if applicable. Your goal should be to ensure that your rental income covers these costs and ideally leaves you with some additional profit. While house hacking can be a great way to offset your living costs, you should also consider the potential for appreciation in long-term wealth building. In many markets, real estate tends to appreciate over time, meaning your property's value could increase, giving you the ability to sell or refinance later down the line and make a substantial profit. Even if you're not actively flipping the property, the passive growth of your property's value over the years can help you build substantial equity and wealth. So how do you get started with house hacking in 2025? First and foremost, you need to do your homework. Research the real estate market in your area, understand the local demand for rental properties, and get a sense of the property prices and rental rates. It's also a good idea to consult with a real estate agent who has experience with house hacking or investment properties. They can help you navigate the market and find properties that fit your goals. Once you've identified a property that meets your criteria, the next step is securing financing. This is where things can get tricky, as the financing process for investment properties is different from buying a primary residence. You'll need to gather your financial documents, such as income verification, tax returns, and proof of assets to apply for a mortgage. Be prepared to put down a larger deposit if you're buying a property with multiple units, as lenders may require a higher down payment for investment properties. After securing financing, the next step is managing your property. As a house hacker, you'll have the responsibility of managing your tenants, handling maintenance requests, and keeping the property in good condition. If you're not comfortable with property management, you might want to consider hiring a property manager to handle these tasks for you. That can take care of everything from finding tenants to collecting rent and handling repairs, freeing up your time and reducing the stress of managing the property yourself. In the end, house hacking is one of the best ways to get into real estate without needing a large upfront investment or taking on significant financial risk. By carefully selecting a property, understanding the financials, and being prepared to manage your investment, you can set yourself up for long-term financial success. Whether you're looking to eliminate your housing costs, generate passive income, or build long-term wealth through appreciation, house hacking in 2025 offers a unique opportunity to achieve your goals. As we move forward into 2025, the real estate market will continue to change, but the principles of house hacking remain the same. Buy a property, rent out part of it, and use the rental income to cover your living expenses. The key to success lies in choosing the right property, securing favorable financing, and being prepared to put in the effort to manage your property effectively. With the right approach, house hacking can be a game changer, offering you financial freedom and a pathway to wealth building that can last for decades to come. So if you're ready to take the plunge into real estate, house hacking is one of the best ways to start building your future today. House hacking offers an affordable and accessible entry point into the world of real estate investment. Traditionally, investing in real estate required significant capital up front, whether through purchasing single-family homes or larger multifamily properties. However, house hacking enables you to reduce this barrier by leveraging rental income to offset your mortgage and living expenses. For many first-time home buyers or individuals with limited savings, coming up with a large down payment or securing a traditional investment property is out of reach. House hacking provides an alternative. By buying a multi-family property like a duplex or triplex and renting out the other units, you can use the rent from those tenants to cover your mortgage payments, taxes, insurance, and maintenance costs. This can significantly reduce your housing expenses or, in some cases, even make you money each month. Moreover, in 2025, financing options are still relatively favorable for house hackers. Programs like FHA loans, which allow you to put down as little as 3.5%, make it easier to secure financing for a multifamily property. These loans were originally designed for primary residences, but can be used for house hacking because you'll be living in one of the units. If you buy a multifamily home, lenders often consider the potential rental income from the other units when assessing your ability to repay the mortgage, making it easier to afford a larger property than you might have initially thought possible. By minimizing the financial strain of owning a home, house hacking gives you the opportunity to build equity and create passive income while living in your property. Over time, this not only covers your housing costs, but positions you for long-term wealth accumulation, making it a powerful tool for those looking to step into real estate without requiring a large initial investment. One of the key advantages of house hacking in 2025 is the flexibility it offers when it comes to generating income. This flexibility allows you to choose the strategy that best suits your property location and financial goals, enabling you to maximize your rental income. The most traditional approach to house hacking involves renting out individual units in a multifamily property. For example, if you purchase a duplex, triplex, or fourplex, you can live in one of the units and rent out the others to tenants. The rental income from these units can cover a significant portion, if not all, of your mortgage, property taxes, and maintenance costs. This option works particularly well in areas where there is high demand for rental properties, such as urban centers or near universities, which can ensure a steady stream of tenants and consistent rental income. Another strategy is renting by the room in a single-family home, which is ideal for those who have properties with multiple bedrooms or separate living spaces. This is particularly popular in cities with a high concentration of students or young professionals. Renting by the room can often yield higher per square foot rental rates compared to renting out the entire property. However, this strategy also requires more active management to ensure that the tenants are compatible and that the shared living spaces are well maintained. In addition to long-term rentals, house hackers in 2025 can also leverage short-term rental platforms like Airbnb or VRBO. In high-demand tourist areas or major cities, renting out part of your property on a nightly basis can generate significantly higher income than traditional renting. While managing short-term rentals can be more time-intensive, with responsibilities like cleaning between guests and handling bookings, the increased income potential often makes it worthwhile, especially in prime locations. Each of these strategies has its pros and cons, but all of them offer ways to offset living expenses and potentially turn your property into a profitable real estate investment. With the flexibility to choose the right strategy for your specific situation, house hacking allows you to make the most out of your property, ensuring a steady income stream while minimizing the costs of homeownership. One of the most appealing aspects of house hacking is its ability to generate long-term wealth with relatively minimal risk compared to other types of real estate investing. For many aspiring investors, the thought of owning rental properties often conjures up images of significant financial risk, especially when considering the large upfront capital typically required for traditional investments. House hacking, however, minimizes this risk by allowing you to live in the property while also generating rental income, essentially turning your home into an income-producing asset without overextending yourself financially. The primary way house hacking contributes to long-term wealth building is through property appreciation. Real estate over time generally increases in value, particularly in high demand areas or regions with economic growth. As your property appreciates, the equity you've built through your mortgage payments also increases, creating a valuable asset that grows in tandem with the market. Unlike other forms of investment that require you to constantly buy and sell, real estate often appreciates passively, meaning you can hold on to your property for years and watch its value increase without actively managing it. Additionally, the rental income generated from tenants helps offset the costs of your mortgage, taxes, insurance, and maintenance, allowing you to keep more of your earnings for future investments or personal savings. As the years go by and you pay down the mortgage, more of your rental income goes toward building equity instead of paying interest. This compounded equity growth can lead to a significant amount of wealth over the long term. Another key factor in reducing risk is the diversification of income streams. By renting out multiple units or rooms in your property, you reduce the financial impact if one tenant moves out or defaults on rent. If you are solely reliant on one source of income, this could jeopardize your financial stability, but with multiple tenants, your risk is spread out, offering more security and reliability in your cash flow. Finally, house hacking allows you to gradually scale your real estate investment. Once you've built up enough equity and experience managing a rental property, you can leverage the increased value of your current property to purchase additional properties, expanding your portfolio and further securing your long-term wealth. This gradual growth, coupled with a relatively low initial risk, makes house hacking a powerful tool for building financial security and wealth over time.